What's up? So, look, it's my intention that this video just push you just a little bit closer to your goals. Just pushes you a little bit further along your journey in trading. Okay, so I have something that I've been doing that's been helping me find extremely beautiful trades, as I like to say, by simply just understanding what's going on in the market. Now, I believe there's over 6,000 companies that are being publicly traded on these exchanges. So, it's impossible for one person to keep up with every single stock. But I do have a tool that you can use that I truly believe will help you, at least find opportunities based on, what you deem an opportunity, right? So as you all know, there's been, a lot of turmoil going on in the Middle East, right? We got we have we have Israel and Iran going back and forth with airstrikes and ballistic missiles. And before going any further, it's just like, all politics aside, it's a tragedy to see, innocent lives lost and people being, caught in the crossfire of whatever people deem this war is about, right? So I just want to get that out the way. Sending, love and all of that stuff to any innocent party, right? We're not naming names, but any innocent party, just hoping that gets better for you, right? Now, in the tragedy, right? In a lot of tragedies comes opportunity. And with this particular tragedy, the opportunity, as we've seen with wars, is typically in the energy and oil space, right? The energy space typically goes off during, a time like this. And then when there's some sort of pullback or truce reached or something that's saying that that the war is going to settle down, you see some sort of, regression from the gains that stock made. Like clockwork, you can go and do your research from previous wars and just see how the stock market reacted, right? It's pretty consistent. So when there's opportunities coming off the back of a tragedy or some sort of major event, some sort of catastrophic event, I want to give you guys an idea of like how you can explore that. And I'm also going to give you an example of one that took place. Matter of fact, what we'll do is we'll get into the example first, right? So we'll just get straight into the example first. Let's see. We'll get right into the example. Give me 1 second. All right. Okay, so I have this stock pulled up right here, right? This stock is down 32%. This stock is HUSA, so it's a Houston American Energy Corporation, right? It's down 32% today. 32%. The stock was up yesterday. I probably should have. I'll put it up on the screen, but I have a photo from yesterday. I'll put this up on the screen right here. But as you can see, it was down. It was up 119% just on Friday, right? Today's Monday, right? What we got? Today's Monday, the 16th, and it's down 32%. It was up 119% last week. Now, as you can see in this chart, I drew this box at this big gap that it created. Look at this huge gap, right? That might not even be the full extent of the gap. I believe the gap may come actually to down about here. Look at that. So it's still a nice ways to go, which I believe it will do, over the next week or so, just depending on, how the news plays out. But this huge gap it created, and it's regressed 32% today. So this would have been a beautiful opportunity had people known how to go look for this opportunity, right? I found this opportunity by using a tool that's available on TradingView. Again, this stock was up 119%, not stock options, not the options contracts. The security itself, the stock itself was up 119%. Incredible, okay? Now it's down 32%. Why? Because any stock that jumps 100% in a day, you got to be like, what's the catalyst on that? So I did a little bit more digging, and actually, as you can see right here, HUSA put this article out about how they had no idea why people were buying their stock. There was no sort of material event that took place. There was nothing that they could point to that made sense. Even the war, because it's not like there's anything that they do that's directly correlated with that. But again, people do love to run to energy companies, so I guess they feel like they were just one of those energy companies. But with that being said, that was the further confirmation that, this is not one of the stocks that's going to do well because of energy. So there's probably going to be some sort of regression coming, right? And it did just that. Off the open, it was down like 10%. Then it went to 20%. Then it went to like 30 something percent, right? And it'll probably continue this throughout the week to get back to size, because it had no business being up here. But again, like when catastrophic things happen, people start to buy irrationally. Sometimes it's uninformed. Sometimes it's like a ploy amongst, people that are in a Reddit group. And sometimes there really is some sort of like scarcity of a particular product because of an event. So it's, you got to just make sure you understand what it is. If it's something that is, closely related to supply and demand, then it probably has a better chance of sustaining that higher price point for a little while until the demand and supply ratio is corrected. But if it's, like the article said, like no real reason why it made that 119% move, consider yourself blessed. You just found a diamond in the rough. You just found a gem that is on its way back down, and you just got to be able to catch it, right? So again, this is a huge gap that it created right here. We're talking about like I said, 100 something percent, and it's already about 30% regressed into this, and it has about $2 more that it can go, but the stock is only priced at 10 something right now. So you do the math on the percentage. All right. So how do I find these unique opportunities? You might be asking yourself, right? How do you find those? Don't worry, I got you. That's the point of this whole video. Now, you want to pull up your trading view. You want to make sure that you have it looking just like this, and you want to go over into the corner, right, where your watch list is, and you want to look at this first icon on the right hand side, right? So there's some up here, but the first one on the bottom half, it says screeners, right? This is going to help you tremendously when there's stuff going on and when there's not anything going on, or when you have no idea what's going on and you don't feel like combing through tons of articles. This is going to be the first thing that gives you an idea of something that, that may be happening in the market, because you're going to see, the percentage gains and losses, right? Very simple tool, but not a lot of people use it. So we're going to click on screeners, right? And it's going to bring up this page right here that says stock screener. Okay. Now, as you can see, I have this in, I believe this is in ascending. So it's showing the ticker symbol, it's showing the price point, and then it's showing the, the percentage change, and it's showing the volume, right? So this is all good volume right here. Whenever you see volume in the millions, that's usually good volume for a stock to trade. Again, you want a stock to have decent volume because you want to be able to get in and out of that trade easily. You don't want to get stuck in a trade that has a crazy high spread and you're just stuck in it losing money, okay? Now, up here are all of the different things you can filter for, right? So you can change, like the price point to, 100 and above, right? You may not want to look at stocks that are less than 100. You may be one of those type of people. You may want a mid-price stock. Try to find something that's between $10 and $100, or you may want to go below $10, right? You may want to try to find a stock that's, less than $10 because that's more in your price range for affordability when it comes to the options contracts. So you could, like I said, you could do that in a variety of different things here. Like you got the dividend yield, analyst rating. So these are all the ways that you can search for different stocks so that you're not wasting your time bringing up something that doesn't fit, the credentials that you want for a particular stock to have. Okay. Next, we have this right here, which is very important, right? You want to, make some sort of change to whether it's ascending or descending, right? So once you've chose the type of stocks that you're interested in looking at, right now I have it just kind of like on all U.S. stocks. Haven't really made any specific changes. I'm going to put it in descending order, right? So descending, that's going to show you, that's going to bring it from the highest gains to the lowest gains. Yes, you are reading this correctly. This is a 2 million% gain, right? But this is on 140 volume. So even though that has such a tremendous gain, right? It was a penny stock that probably, went from a fraction of a penny to like, 2 cents or something like that, which was like a 2 million% growth. But there's nobody to sell it to. As you can see, it's 140 volume, not million. I don't even think thousand, right? Because it's no K here. So the chances of you being able to get out of that, would be damn near impossible. So, yes, these numbers look insane for growth, but again, if the volume is not good, then it's not a good opportunity. So we'll get down to some that have incredible volume, right? So right here, this was a 283% growth and has 5.16 million in volume. You can get in and out of something like this. Now I'm going to take you to I'm going to take you back to let's put it in ascending. All right, so now you can see some of these losses, and you're probably going to see HUSA really soon, right? So we're in the 90s. All of these 90% drops. What I would recommend you doing is just taking note of some of these that have these incredible drops. See if they have the volume that you're interested in, and then go do some research as to why they could have possibly dropped like they did, right? If a stock has dropped significantly, like 90% or more, or even 50 or 20, those are all crazy jumps, not typical for a day. You may want to go research why that happened, right? So all of these wouldn't necessarily, make the cut. But again, this one right here, 11.7 million. So there's, if the volume is there, then it's something that may be worth. This one right here, down 37%, 73.43 million volume. Again, it's a power company, right? Energy company. This may be something to explore. Why are they down that much, right? This could be coming off of something that, that shot up the week before. But you want to go and try to understand what the reason is, because when you see moves that are this big, what you can do is you can position yourself in opposition of it, right? You can find a reversal point and, swing it back to size, right? I'm not saying a weekly necessarily. I'm not even saying 2 weeks. Sometimes it may be longer than that. But if you're, putting stocks like this on your radar, then you can start looking for the opportunities for that reversal and catch really, 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 really big, rare moves. Okay. So this screener app is going to be, this screener tool is going to be really monumental for you. So again, I told you we're going to see HUSA pop up here somewhere. Okay, here we go right here. See 3 million in volume. It popped up right here. It's 1060. It dropped 32.27 and was up 119% on Friday. So if you would have caught that, you could just do the math on the options. And the spreads were not that bad. The spreads were anywhere from like 50 to like 70 cents. So not super crazy, not the greatest spreads, but with a 32.27% drop, you would have more than made, I don't even know the exact number, right? I have to see the option chain to give you the exact calculation, but we're talking about at least 4 times what you would have put in there, right? Now, these opportunities don't come along every single day, so it's important to check this on a consistent basis to see when something is off, right? We know that stocks are always just trying to simply correct themselves, right? They're just trying to simply correct themselves. So we want to find opportunities for imbalance and get in opposition, right? When something takes off, we want to make sure that we are ready for when it gets tired, right? When something starts running, we want to wait for it to get tired, and then that's when we start our fight, right? So we're not fighting fair. We're waiting. We're gonna let that stock wear itself out, and then when it's tired, now we're able to step in and do what we need to do, well rested, clear on exactly where we're going. Okay. So I just wanted to share that with you. Like, this is something that's going to take your trading to the next level. I'm going to continue to give you gems, to just plug and play, right? Like, never take my word strictly, right? Always go and try to do it yourself. Always go and test against what I'm saying. I'm the person that's doing the reading. I'm the person that's doing the researching and the finding, but I want you to also condition yourself to do the same thing and not fully trust what I'm saying without going and making sure that it is indeed true, right? When you get to a point that you're like, okay, I see this person is saying some things that, that are consistently working out for me, then maybe the trust, will elevate even more. But I always want you to be a person that's self-sufficient and not completely reliant. It's going to make you a much more confident person, which is going to lead to you being a profitable trader and an overall better human being. Okay. So I appreciate you tuning in. I hope this video was helpful. Please leave a comment, like, and share below if this was something that helped you. All right. I'll see you in the next one. Peace.